Welcome to this video, and in this video we are going to discuss about employment income. So we are looking at the taxation of employment income, and when it comes to taxation of employment income, there are mainly three things that you need to be very careful, or you need to be aware of. First, you need to know the cash benefits. You need to know the benefits in kind, and you need to know what is exempted from the employment income. So those are the three things on which questions that relates to employment income always rotates on: the cash benefits, the benefits in kind, and what is exempted. So to start, let's look at the difference between employment and self-employment, because this difference will help us to know what should we consider as employment income and what shouldn't consider as employment. Because in employment income, we tax employment. If it comes to self-employment, that one goes to business income. Now, employment income, or what we call employment, it is a contract of providing a service. And what we call self-employment, it is a contract for providing a service. However, the distinction between these two should be decided by looking at the facts in the engagement. So you are going to look at the contracts in the terms of the engagement. Then those terms in the engagement will help you to know whether it is an employment or a self-employment. So let's look at some of the factors which may be in the contract and can indicate to you that this is employment. So the first one, you can look at the degree of control. So if the degree of control is too high, the employee is controlled by the employer, then you can consider that one as an employment income. But if the degree of control is not so high, then it can be a self-employment. Another one is whether the worker can accept further work. If the employee can accept further work if offered without any motivation or without any payment, then that one is automatically an employment income. Now, another one is whether the worker is entitled to employment benefit. If an employee is entitled to receive employment benefits like a leave pay, a sick pay, then that one automatically is an employment. So those are some of the terms that you are going to look at in your contract, and then be able to identify whether this one is employment or it is not employment. So which factors that indicate self-employment? Some of the factors that indicate include whether the work provided his own equipment. So if you employ someone and the employee comes with his equipment to do the job, then that one is a self-employment. Then whether the work hires his own helper. So if you employ a worker and the worker comes with a helper, then that one automatically is a self-employment. So you can also look at the degree of financial risk. In self-employment, the degree of financial risk is high, but in employment, the degree of financial risk are low. So you look at those factors and then you identify whether this one is employment or it is not employment. If it is employment, then you take it to employment income. If it is self-employment, then you are going to take it to business income. So let's also look at these factors. These some of these terms that are used. Casual labor. When we say a casual labor is an employee who does not use special skills. So, and the terms for casual labor does not exceed 3 months. So, in the case of a casual labor, we tax at a rate of 15%. And when you are calculating a tax on a casual labor, the first 30,000 is exempted. For example, if a casual labor is getting 100,000, if he is getting 100,000, you are going to get 100,000 minus 30,000, then you multiply by 15%, then you can get the tax for a casual labor. Now, when it comes to second employment, a second employment we tax it at 30%. So we don't make any adjustment. So that is how we tax the second employment. So let's look at what we consider under employment income. So in our employment income, or what we look at as our cash benefits, include the wages, the salaries, the leave pay, the sick pay, medical allowance, payment in lieu of leave, sitting allowance, commission, bonuses, gratuity allowances, subsistence allowance, housing allowance, entertainment allowance, travel allowance. All of those ones are under your cash benefits. So other cash benefits, you may have a discharge or reimbursement of expense incurred for the employee. So if an employee incurs an expense, but those expenses are personal, and then the employer reimburses, then that one is also taken under your employment income or your cash benefits. Then payment to employee working in exceptional conditions. If an employee is working in a very harsh condition and that employee is paid a certain amount to work in those conditions, then that one is also considered under employment income. Then we also have pension payments, or the pension payments received by an employee, which is not state pension, then that one is also employment income. So also you can say any payment an employee receives as a result of the present, future, or previous employment, whatever you receive as a result of your job, which is in cash, either because of your previous job, or because of the future job, or because of the present job, then that one is also considered an employment income. So what do we exempt from employment income? So expenses that incurred by employee on official mission. So reimbursement of those expenses which an employee incur on an official mission, then those expenses are exempted. We don't include those expenses in our calculation. So when we are computing that one, we ignore the expenses incurred by employee on official mission and the company reimburse. So don't consider those them when you are computing. So another one is a contribution made by the employer for employee in a public institution in charge of security fund. In this case, we are looking at the medical allowance, the medical contribution, what we call the RAMA or the RSSB, and we also look at the pension. So the contribution in the medical for the health of the employee, or the health insurance, and the RSSB or the pension payments, that one is also exempted. Then we also have pension payment from public institution in charge of social security fund from a qualified pension fund. So if an employer is contributing in a qualified pension fund, that one is also exempted. We also have income of received by an employee who is a Rwandan, who is not a Rwandan. You are paying a non-resident, and that person is paid by a foreign international organization, or is paid by a foreign government. When there is a bilateral agreement between those two countries, then that income is also exempted. We don't tax. So we also have person is exempted from employment income. So the person who have exempted, we have the ambassadors. Those are representing their country in Rwanda. We have employees from the embassy who have a diplomatic passport. So those employees from the embassy and they have a diplomatic passport, they are also exempted. The third one is what we have talked about in our previous slide. A non-resident employed by international organization and is paid by foreign government, and there is a bilateral agreement between the countries, is also exempted. So let's look at the benefits in kind. Remember what I said when we are starting this discussion. I said whenever you are calculating employment income, you need to look at the cash benefits, which we have looked at in our employment income. What do we include? we look at what is not included, what we do not include in our employment income. Then the third one I said is the benefits in kind. And when it comes to the benefit in kind, we said is any payment that is not in cash. Whatever an employee receives which is not in cash, then we consider that one as a benefit in kind. So the first benefit in kind we can talk about here is a motor vehicle. So if an employer has given a motor vehicle to the employee, and the employee uses the motor vehicle for both private and business, then the benefit will be calculated at 10% of the total cash benefits an employee receives. So we get the total cash benefits an employee receives, then we multiply by 10%, then we get the motor vehicle benefit. So when we are looking at this, please, we don't look at the fuel, we don't look at the driver, we don't look at the cost of the vehicle. What we look at is the employee given a vehicle? Yes. If he's given a vehicle, is the employee using the vehicle for both business and private? Yes. Then we get the total cash benefit of that employee, then multiply by 10% to get the benefit in kind. So another benefit in kind is what we call a loan or a salary advance. An employee may be given a loan or may be given a salary advance. So if an employee has been given a loan, then the benefit in kind will be the interest charged, the difference between the interest charged by the employer and the interbank interest rate. So you look at the interbank interest rate minus what the employer charged, then you multiply by the principal, and then you get the benefit on the loan. In case an employer has given a salary advance, the calculation is the same, but in case of a salary advance, the 3 months salary is exempted. We don't tax the 3 months salary. So we get the 3 months salary of the employee, we less it from what he received from the employer as a salary advance, then what remains we multiply by the difference between the interbank and the interbank rate and what the employer charged. So let's look at this simple example. Suppose an employer gives a loan of 10 million to the employee at an interest rate of 12% when the interbank interest rate is 15%. So the taxable benefit will be, so we are getting the interbank rate minus what the employer charged, then what we get we multiply by the principal. So in this case, our benefit is going to be 300,000. Look at this example number 2. John received a salary advance. In this case, we are having a salary advance of 80 million from his employer, which must be paid within 1 year. The gross salary is 1.5 per month. John was not charged an interest, it is interest free. The interbank rate is 8%. Then compute the benefit. As I said, you first get the 3 months salary. So our 3 months salary is going to be 1.5 times 3. We get 4.5. Then the benefit is going to be calculated by getting the total salary advance he got, which is 80 million, minus the 3 months salary, then times the difference, which will be 8% times minus 0, then we get 280 as our benefit in kind. So another one we have is a housing benefit. So if it is a housing benefit, still we look at the total cash benefits an employee receives. We only exclude the benefit in kind. So we get the total cash benefits times 20%. That is going to be the house benefit. So we don't consider whether it is furnished or not furnished as long as an employee has received the house. So we get 20% times the total cash benefits. Now, in case an employer is renting a house, or in case an employer is renting a car, then we consider the amount rented or amount the employer pay on rent, or the amount the employer pay on rent on hire of a vehicle as an allowance, as we saw them in our previous slides. So let's look at, and this is another example. Assume an employee in the illustration 1 above obtains a house and a vehicle use in kind, as well as a loan of 2.4 free of interest during the month. Assume the National Bank interbank rate is 10%. So the benefit will be, so we are getting, remember our total cash was, we are getting 20% of our total gross, which is going to give us this. This is a house allowance. Then we also consider the motor vehicle, which will be 10%. Then we consider the interest. It was interest free, so we get the 10 minus 0 when times the loan received, because it is 1 month, we divide by 12, we get 20. So our taxable income, we are going to get the house benefit plus the car benefit plus the interest or the loan benefit, then plus the basic salary, then we get our total taxable employment income. So other benefits, we have domestic employees, where an employer can maybe hire employees, domestic employees to the workers to the employee. For example, maybe senior manager and the company is paying for you security at your home. So the benefit is going to be what the employer pays to those domestic employees. So you add it to your employment income. So other benefits we have is school fees. If an employer is paying school fees to you, or is paying school fees of your children, then still the benefit is the amount an employer is paying in terms of the school fees. So that is going to be the benefit. So the other one is what we call any other assistance. Any other assistance an employee receives from the employer, or the family member of an employee receives from the employer, which is not in cash, we are going to consider it as a benefit in kind, and we are going to add it to our taxable employment income. So let's look at this example. As I said in my previous, when we are starting, when you are looking at questions of employment income, there are only 3 things that you are looking at. What are the cash benefits? What are the benefit in kind? And what is exempted from tax? So let's go through this question as we are identifying that information. So what we are going to look at is to be able to identify what are the cash benefit. So the cash benefit, we will put it in red, whereas the benefit in kind in yellow. What is exempted, we put in green. So if you look at this is our cash. I will put in red. This is also cash. Put in red. If you look at this one, is a cash benefit. I will put in red. A company house. This is a benefit in kind. We said the benefit in kind we put in yellow. Company car, it's also benefit in kind. We put in yellow. Domestic employees, that is benefit in kind. We put in yellow. So medical insurance contribution of 80 per month. The general policy of the employee is 50,000. So we get the difference in this case. We shall consider it as a benefit in kind, the difference. So we're going to put in yellow. During the month of June, he was sent on an official mission. So this is an official mission. It is exempted. So we put this one in green because we are not taxing it. Then during the November, his wife So this one is a benefit in kind. We are taxing it. It's a benefit in kind. We tax. The employer with the head, this one is a payee. We shall consider it. It carries out agriculture activity, so we shall look at also this one. So that is what you should do whenever you are answering a question on employment income. Try to separate the cash benefits, the benefit in kind, and what is exempted from the employment. That is all about employment income. So if you master that, then you cannot fail a question on employment income. So this is our solution. We are looking at our cash benefit. Remember, we put our cash benefit in red. So we have the salary, we have the communication, we have the overtime. So you get our total cash benefits or our total employment income. Then we have the benefit in kind, which we put in yellow. We have the company house, we have the company car, we have the domestic employee, we have the medical contribution, we had the difference, the medical expenses for the wife, that is also considered. Then we get the total. Then we have the total employment income. So let's look at example 2. This example 2, Umwari is employed. Remember our technique we have said. The cash benefit, the benefit in kind, and what is exempted. That is what you should do whenever you are answering a question. Even when you are reading on your own, that's what you should do whenever you are attempting questions on employment income. So we have this monthly salary. We said this one is the cash benefit we put in red. Transport, still it is a cash benefit. Communication, cash benefit. We have a university house. This is a benefit in kind. So we put in a yellow. Overtime allowance. This is a cash benefit. We put in red. During the month of June, she received the salary advance. So this one is it is a benefit in kind. We put in yellow. So during the month of October, Omari attended a university meeting in Kigali, a period of 5 days. So this one is exempted. She was on official mission. We put in a green because it is exempted, as we said. Then before joining the university, Umari was employed by Ines. She's receiving a pension. This one we tax. So because of the previous employment, it's going to be a cash benefit. Sorry, it's a cash benefit, not a benefit in kind. Cash benefit. During the month of April, her husband got an accident. The university contributed to marry this. This is a benefit in kind. We recognize it. It's yellow. Then the university contributed this for Omari's in a statutory pension fund, and 100,000. So these one are exempt as per the new guideline in the tax law. We consider this one as exempt. We don't tax. Exempt. So we shall consider this, what she contributes, and then the employer withheld this. So let's look at the solution for this. The moment you have identified this in your question, you cannot fail to score the highest marks on this part, because the question on employment income always rotates on those three issues: cash benefit, benefit in kind, what is exempted. Then once you get that, then you can be able to score higher marks as far as employment income is concerned. So if you look at our solution, so this is our cash salary, add other cash, transport, overtime, communication, pension payment, then we get our total cash benefits. So this one I think it's okay. Then what our benefit in kind? Salary advance, we have a working on it, you can look at. Accommodation, treatment of the husband, statutory pension, that is 0, private pension is 0, personal allowances, we less this one, this is what he contributed, we less it from the employment income, then we can calculate our tax. So another thing we can talk about is the pension scheme, because we cannot separate so much employment income and the pension. So we need to know how to compute the pension. So when we are computing the pension, because you have the statutory pension, which we contribute to state pension funds like RSSB, but we also have what called a provident fund, provident pension, what called a provident fund scheme. Those are organizations within which is made by the employer. That one we don't consider it. And if an employer is making in a provident fund, those are private organizations, then that one is taxed. We don't exclude that one. So this is the tax base for calculating, or this is how the rates for the calculation of pension. If we have pension, which is 3%, occupational hazards, which is 2%, employee does not pay for occupational hazard, maternity, which is 0.3, so the total pension for employer is 5.3, and the total pension for employee is 3.3. So the tax base, when we are calculating the pension, we get our gross salary, or that is what called the total cash benefit, minus transport allowance, then we add the benefit in kind. Then you get the tax base for pension. Then the condition for a qualified pension fund, it must be established according to the Rwandan law to qualify, what you call a qualified pension fund. For you to recognize that this one is a qualified pension fund, number one, it must have been established according to the Rwandan law. It is operated for the principal purpose for providing pension payment to residents in Rwanda, or in the country. And it has effective management in Rwanda at any time during the tax period. So if a qualified pension fund meets this condition, then we can recognize that it is a qualified pension fund. So this is what we can talk about as far as employment income. So I want you to remind you the 3 important things that we have talked about in this video. Number one, I said you must be able to identify the total cash benefits in your question. So whenever you are reading through the question, try to identify what are my cash benefits. Then also identify what are the benefits in kind. Then also identify which income that is exempted from employment. So the moment you get those 3 items, then the question for employment income is finished. Nothing else you are going to meet as far as employment income is concerned, apart from what we have talked about or what we have discussed in this video. So please watch my next video on taxation of business profit.